Hey, Ryan Reynolds here. Wishing you a very happy half-off holiday because right now Mint Mobile is offering you the gift of 50% off unlimited. To be clear, that's half price, not half the service. Like, Mint is still premium unlimited wireless for a great price. So that means a half day. Yeah?
Give it a try at mintmobile.com/switch.
Upfront payment of $45 for 3-month plan equivalent to $15 per month required. New customer offer for first 3 months only. Speed slow after 35 gigabytes if network's busy. Taxes and fees extra. See mintmobile.com.
The holidays are coming, and I've got a Boost Mobile gift just for you. Aw, for me, Anna? Yes, Anna, you deserve a gift. The Boost Mobile Unlimited plan is just $10 a month for the first 2 months, then $25 a month forever, with unlimited data, talk, and text. It's a gift. Thanks, Anna. Anytime, Anna.
The holidays are here, and the best gift is for you. Offer valid at boostmobile.com. After your first 2 months, you'll pay $25 a month unless you go online or call to cancel. Requires autopay.
Good afternoon, and thank you for joining us for Rivian's third quarter 2025 earnings call. Today, I'm joined by RJ Scaringe, our CEO and founder, Claire McDonough, our Chief Financial Officer, and Javier Varela, our Chief Operations Officer. Before we begin, matters discussed on this call, including comments and responses to questions, reflect management's views as of today. We will also be making statements related to our business, operations, and financial performance that may be considered forward-looking statements under federal securities law. Such statements involve risks and uncertainties that could cause actual results to differ materially. These risks and uncertainties are described in our SEC filings and the shareholder letter we have filed with the SEC. During this call, we will discuss both GAAP and non-GAAP financial measures. A reconciliation of historical non-GAAP to GAAP financial measures is provided in our shareholder letter. Just before the earnings call, we published and filed our shareholder letter, which includes an overview of our progress over the recent months. I encourage you to read it for additional details around some of the items we will cover on today's call.
Hello, everyone, and welcome to Kilowatt, a podcast about electric vehicles, renewable energy, autonomous driving, and much, much more. My name is Bodie, and I am your host. And on today's episode, we are going to cover, obviously, Rivian's Q3 2024 earnings call. Now, I do need to let you know that there are some folks here installing an AC units. We got new air conditioners today, and they've been at it all day and working very hard. So I did not want to, I didn't want to record earlier, but since they've been here all day, I'm not going to get this out unless I start recording. So you may hear some banging or, just random air conditioner installation noises. That would be normal. And then also, because I don't know anything about AC units, I did know someone who I could contact who does know things about AC units, and that is Joseph, who's a member of the Kilowatt community. Joseph lives in Prescott, and he was nice enough to take some time out of his day and talk to me and kind of walk me through some things and give me some good advice. So thank you, Joseph. And, my offer the next time you're in Phoenix of getting you coffee, if I'm not working, buying you a cup of coffee, I would be happy to follow through with that. Just send me an email. Okay, before we get into the Q3 2025 earnings call for Rivian, Mark sent along an article that I should have read on our last episode when we talked about Ford's earnings call, because it has to do with Ford. So Mark lives in the UK. And right now, the UK, he's always sending us good information on the UK and EU sales numbers. And there's a lot happening in the UK at the moment. Plug-in vehicles hit a 37.6% market share in the UK last month. That's up from 30% a year ago. So a year ago, they had 30% market share. Now they have a 37.6% market share. And then battery electric vehicles alone grew 24% year over year, now making up 25.4% of all new cars sold. So that's fantastic. Total sales across the country were basically flat. So when you look at the growth in the EVs, that's good news for the EVs, because we had flat sales, but EV market share still rose. So that's fantastic. And that's in part due to the zero emissions vehicle mandate that we talked about in a previous episode, where there are incentives if you decide you're going to buy an electric vehicle. Now, where there are incentives, there's sometimes a tax. Right now, there's a little bit of a cloud on the horizon. The UK government is considering a 3 pence per mile tax on battery electric vehicles. And the average battery electric vehicle driver may end up paying, if this goes through, around £300 a year, which is not nothing. Now, in terms of sales numbers for different brands, Ford took the number one spot in the UK battery electric vehicle market for October. They captured 9% of all electric vehicle sales, or battery electric vehicle sales. That puts them ahead of Tesla for the month. And that number one spot is largely thanks to strong demand for the Ford Puma and the Ford Explorer EV. Notable mentions, Audi and Volkswagen were close behind Ford in October, and Renault had a breakthrough month with the Renault 5, and that hit some record-setting numbers. So that's great. Despite a quieter October, though, for Tesla, they still hold the top position if you look at it 3-month rankings. So Tesla's still on top when you look at it across more months, right? But Ford is now within 100 units of Tesla. So it's going to be a battle for sure. All right. Like I said, I should have covered this on the Ford earnings call, but I do think that, slipping it in before the Rivian earnings call is worth mentioning. Now, as far as the Rivian earnings call, we're going to start with RJ's opening remarks. I'm going to stop kind of halfway through RJ's opening remarks and just kind of make a comment about the R2. But for the most part, his opening remarks were like less than 10 minutes. So I just kept his entire opening remarks in. When we get to Claire McDonough, the CFO's opening remarks, I shortened hers a little bit, but hers were really short as well. All right, let's go ahead and listen to RJ's opening remarks.
Thanks, Chip.
My name is Bodie, and you know that my name is not Chip. My name is Bodie. Anyway, we will continue, despite RJ being very rude in this situation.
Good afternoon, everyone, and thanks for joining us for today's call. We continue to make progress against our key strategic priorities, including preparation for the launch of R2 and development of our technology roadmap, including autonomy and our vertically integrated hardware and software. As we've stated before, over the long term, we expect the industry to be fully electric, autonomous, and software-defined. I've never been more confident in the opportunity ahead for Rivian than I am today. I firmly believe Rivian's technology, along with our direct-to-consumer ownership experience, position our company to build a category-defining brand with a strong product portfolio for the U.S. and European markets. One of the key drivers for attracting customers to electric vehicles, and to Rivian's products more specifically, is consumer choice and price point. The average new vehicle purchase price in the United States is now just over $50,000, and the most popular configuration is a 5-seat SUV or crossover. Given the attractiveness of this addressable market, I believe R2 is addressing the largest market opportunity with the right product. We leveraged the performance, utility, and personality of R1 and refactored it into a smaller SUV at a lower cost. From an R&D perspective, our teams are executing well to ensure the development of R2 remains on track with our plans. We continue to increase the quality and maturity of our design validation builds, positioning us to begin manufacturing validation builds at year-end, following the full commissioning of production equipment. We recently completed the construction of our 1.1 million square foot R2 body shop and general assembly building, and our 1.2 million square foot supplier park and logistics center. All shops have started equipment bring up, and we are in the process of commissioning the robots in the R2 body shop. In addition, we have completed updates to our paint shop that will allow us to increase our total annual plant capacity to 215,000 units. I've been driving an R2 for a while now, and it is incredible. From a performance perspective, it delivers on the adventurous spirit customers expect from Rivian, while also being a great daily driver that will fit so many different use cases for our customers. Looking longer term, we expect to add an additional 400,000 annual units of capacity for R2, R3, and associated variants with our next U.S. manufacturing facility in Georgia. In September, we are honored to be joined by state and local officials for a groundbreaking ceremony. Our significant investment in the state of Georgia is expected to create 7,500 jobs, as well as billions of dollars of economic benefits to the local community as we expand our U.S. manufacturing and technology footprint.
Okay. Pretty decent update on R2. Obviously, R1 is doing well in certain segments across the United States here, but R2 is going to be really the big seller for Rivian. Let's go ahead and continue with RJ's opening remarks.
In parallel to the progress we've made in developing R2, we've also continued to invest in our technology, including our hardware, our software, and our autonomy platform. I'm excited to share the progress we're making at our upcoming Autonomy and AI Day on December 11th. Over the longer term, we believe what will differentiate Rivian's autonomous capabilities will be our end-to-end AI-centric approach. With the launch of R2, our growing fleet of customer vehicles will collect real-world driving data, which will complement the data already collected by our second-generation R1 vehicles. That data can be used to train our large driving model, which we believe will allow a rapid rollout of updating driving inference models with growing capabilities. In closing, as we look towards 2026, I'm excited about the opportunity ahead for Rivian. I believe our technology and our products will position Rivian as a market share leader over the long term. I want to thank our employees, customers, partners, suppliers, communities, and shareholders for their continued support. With that, I'll pass the call over to Claire.
Okay. Before we get to Claire, that's his whole opening remarks. Very short, which is great. I do enjoy it when they are shorter rather than when they are much, much longer. Autonomy Day, we're definitely going to make sure to cover that on December 11th. I'm looking forward to hearing what Rivian is doing. Let's go ahead and move on to Claire's opening remarks. Again, I did take Claire's opening remarks and I cut out a little bit of it because it's not relevant to this show. And I should also mention that I kept almost the entire earnings call. There was probably 4, maybe 5 analyst questions that I just cut out, whether it was because the question was already answered or because it was just too much of a financial driven question. And I was like, well, this is probably interesting for most of the people who listen to this show. So I tried to, keep it somewhat relevant to the things that we talk about. So let's go ahead and jump into Claire's opening remarks.
Now looking at our automotive segment, during the third quarter, we produced 10,720 vehicles and delivered 13,201 vehicles from our manufacturing facility. As we've said previously, we expect Q3 will be our highest delivery quarter for the year, which was the primary driver of the $1.1 billion of automotive revenue. Automotive gross profit in the third quarter was negative $130 million and was negatively impacted by low fixed cost absorption associated with planned shutdown to prepare the normal plant for R2. Despite this headwind, we saw strong progress in our unit economics with one of the best quarters ever in automotive cost of goods sold per unit delivered, driven by improved material costs. Our software and services segment reported another strong quarter with $416 million of revenue and $154 million of gross profit. About half of the revenue within software and services was a result of the software and electrical hardware joint venture we created with Volkswagen Group. We also experienced strong growth and gross profit contribution from remarketing and vehicle repair and maintenance. Looking at our balance sheet, we ended the quarter with approximately $7.1 billion of cash equivalents, and short-term investments. We continue to see improvements in our working capital, primarily driven by our focus on reducing our raw material, work in progress, and finished goods inventory levels. We continue to expect to receive additional capital of up to $2.5 billion associated with our Volkswagen Group joint venture transaction, $2 billion of which we expect to receive in 2026. Additionally, we continue to partner with the Department of Energy for an up to $6.6 billion loan at a favorable cost of capital. We will update the market as we progress on this important project for the company. Finally, for our guidance, we are reaffirming our 2025 delivery guidance range of 41,500 to 43,500 units. We are reaffirming our 2025 adjusted EBITDA loss guidance range of $2 billion to $2.25 billion and 2025 capital expenditures guidance of $1.8 billion to $1.9 billion. We continue to expect our gross profit for the full year of 2025 to be roughly break even.
Okay. So, not a great year for Rivian, but not a bad year. They've had worse for sure. Produced 10,720 vehicles, delivered 13,000 vehicles, and they're going to be basically break even for the year.
This episode is brought to you by Capital One. Capital One's tech team isn't just talking about multi-agentic AI. They already deployed one. It's called Chat Concierge, and it's simplifying car shopping. Using self-reflection and layered reasoning with live API checks, it doesn't just help buyers find a car they love. It helps schedule a test drive, get pre-approved for financing, and estimate trade-in value. Advanced, intuitive, and deployed. That's how they stack. That's technology at Capital One.
Hey, Ryan Reynolds here. Wishing you a very happy half-off holiday because right now Mint Mobile is offering you the gift of 50% off unlimited. To be clear, that's half price, not half the service. Like Mint is still premium unlimited wireless for a great price. So that means a half day, yeah?
Give it a try at mintmobile.com/switch.
Upfront payment of $45 for 3-month plan equivalent to $15 per month required. New customer offer for first 3 months only. Speed slow after 35 gigabytes if network's busy. Taxes and fees extra. See mintmobile.com.
Why choose a Sleep Number smart bed?
Can I make my site softer?
Can I make my site firmer?
Can we sleep cooler?
Sleep Number does that. Cools up to 8 times faster and lets you choose your ideal comfort on either side. Your Sleep Number setting. Enjoy personalized comfort for better sleep night after night. It's the final days of our Black Friday sale. Recharge this season with a bundle of cozy, soothing comfort. Now only $17.99 for our C2 mattress and base plus free premium delivery. Prices higher in Alaska and Hawaii. Check it out at a Sleep Number store or sleepnumber.com today.
You know you've reached peak couple energy when your undies match. MeUndies Match Me has you both covered, literally, in super soft ultra-modal undies, socks, PJs, and loungewear. Festive prints? Check. Cozy vibes? Double check. And right now, it's deal season. Get up to 50% off site-wide for Black Friday and Cyber Monday. Take your couple game to the next level with MeUndies Match Me. To get deals up to 50% off, go to MeUndies.com/ACAST. Enter promo code ACAST. That's MeUndies.com/ACAST. Code ACAST.
All right, let's get to our first analyst question.
Our first question comes from Emmanuel Rosner, Wolf Research. Emmanuel, your line is open. Please feel free to unmute yourself and ask your question.
Great. Thanks so much for taking the question. My first one is on, curious if you could characterize the demand environment in the U.S. That you're experiencing on the back of the removal of the consumer tax credit. Obviously, a big portion of industry reports monthly sales and did so yesterday. And for those that that are involved in the EV business, there was quite a bit of a drop September into October. So just curious what you've seen and then sort of like level of comfort around the demand levels on a go-forward basis.
Thanks, Emmanuel, for the question. We certainly expected to see a pull forward of demand from October into September with the end of the IRA program, and we saw that in September. And that pull forward, of course, results in somewhat of a softer demand environment as we look at October. And I think that's, as you referenced, I think that's true just across the full space, across the industry, across multiple different manufacturers. I think it's important, though, that we look out from a longer term horizon point of view and recognize that ultimately customers are going to be making decisions around what's the best product for them. And we spend a lot of time, I think, often overly focused on electric vehicle sales relative to others. And the way we think about this, in particular with regards to R2, is we need to build the best vehicles and give customers great choices. And so in the case of R1, we have the best-selling premium SUV sold in the United States. And that's for EVs, premium SUVs. And we have the best-selling SUV, electric or non-electric, in the state of California. And with R2, we're really hoping to capture the magic of what is in R1 in terms of performance, features, capabilities, and a much more cost-effective or affordable package that allows us to have this vehicle be cross-shopped with so many different types of vehicles, and it's hitting the most popular segment with midsize SUV, 5-passenger SUV, with a price point that starts at 45. The average price of a new vehicle sold in the United States is around 50. So we're really bullish, really confident on R2 and what that represents for us as a business.
Okay, so I'm not sure that RJ 100% answered this question, but in the beginning, it's kind of what we expected. Everybody's who can afford to buy an EV and wants to get that tax credit is going to get that in there before October, and then we're going to see a little bit of a cooling off period. And I would expect that we would see this cooling off period for much of 2026, definitely through the rest of 2025, and maybe through all of 2026 until 2027. And we're going to get a lot of articles about how the EV industry is dead and dying. Meanwhile, companies like Rivian and Tesla and Lucid and BYD and all the Chinese companies, Leap Motors, Slate, Tello, Aptera, they're going to just quietly be, building their vehicles. And next thing you know, we're going to see more and more of those EV startups. Some of them are going to go away. It's just the way it is, unfortunately. But we'll start seeing more and more of those companies. One of the things that I thought was interesting when I was going through the companies that I wanted to visit at the Consumer Electronics Show this year is there's not a lot of EV companies there. As a matter of fact, at some point I was like, maybe I should not have gone to CES. Maybe I should have gone to the LA Auto Show. But in reality, I still think there's so many companies at CES. I'm sure I'm going to find interesting stuff. And I probably have 18 or 19 already companies that I want to visit. So we're still going to get good content out of it. But as far as car companies, I don't know that we're going to see all that many, Last year we saw Scout and Aptera, and then we saw in 2023 Dodge and a bunch of other Volkswagen, a bunch of other car companies there. Fila, I don't know. I'm curious to see if they'll still be there. I'm not seeing them in the lists of companies that I want to visit. So we'll see. It's a consumer electronics show. It is not an auto show. So I don't expect necessarily they're going to be there, but we'll get lots of infotainment companies and autonomous driving companies and that kind of stuff. We'll still see all that stuff. They did get one question about regulatory credits, which is, basically they're building, all electric vehicles. So they get these regulatory credits and they have a mass amount of them. So they sell them to other companies like Tesla does and Lucid and Rivian. And someone asked, are you counting on these? How much money do you think you're going to make on regulatory credits this year? And basically, they're not counting on them at all. It's a zero. They're counting on them zero. If they make a little bit off of them, all the better. But for the most part, they're expecting to make $0 off of regulatory credits. All right. Next question is about Rivian's spinoff company. It's called Mind Robotics, and it is its own separate AI and robotics focused company. Rivian is a large shareholder. Recently, I think Mind closed a $110 or $115 million deal. So we're going to get a question about that. And let's go ahead and hear it because I'm rambling.
Thanks. My other question was on Mind Robotics. You mentioned doing work with Mind Robotics, but also bringing in external financing. So maybe just talk a bit more about what Mind Robotics does and what kind of opportunity you see for that entity going forward. Thank you.
Yeah, Mark, this is an area we've spent a lot of time on as a company, thinking about, I should say, what does our manufacturing infrastructure and manufacturing platforms look like long term? And as we've thought through that, it led us to the view that we need to develop products and robotic solutions that can allow us to run and operate our manufacturing plants more efficiently. And the design of these robotic solutions, capturing the data that we have within our existing facilities to train the robotic platforms on manufacturing and to train on some of these high dexterity operations. And so we've ultimately raised $110 million in a seed round to launch this as an effort outside of Rivian, but obviously with Rivian still as a close partner and as a shareholder in this entity. But the applications will include Rivian applications, but also much wider ranging. So thinking about essentially a wide spectrum of industrial applications where we see the benefit of AI-enabled robotics.
I feel really confident that we will hear more about this on December 11th. So let's go ahead and move on to the next question, which is, how's the Volkswagen joint venture going?
Our next question comes from George Gianarikas with Canaccord. George, your line is open. Please feel free to unmute and ask your question.
Hi, everyone. Thank you so much for taking my questions. Maybe you could just update us a little bit on the Volkswagen relationship, just because there are lots of headlines as to what's going on there internally. Any update there would be very much appreciated. Thank you.
Yeah, the Volkswagen relationship coincidentally is coming up in terms of the joint venture on the 1-year anniversary. And, it's a lot has happened in the last year. We continue to make great progress. We have an incredibly productive and strong relationship with Volkswagen Group. I was just in Munich a few months ago for a number of different product reveals, one of which was the Volkswagen ID.1, which is a roughly $22,000 EV that's being developed by Volkswagen and, of course, leveraging our technology platform. And it's just an awesome vehicle. I'm really excited for that to be one of the launch vehicles that comes out of our collaboration and joint venture with Volkswagen. But it's the first of what will be many programs that come out of this joint effort. And so the relationship remains very strong, very positive, and there are lots of things to come in front of us in terms of products and other ways we can work together.
Okay, this is a non-update update. It sounds like everything's going really well. No real specifics other than the Volkswagen ID.1, and no news is good news, I guess. Next up, we're going to hear a little bit on whether or not Rivian would be open to partnering with another company with a rideshare, much like Lucid did with Uber.
Thank you. And maybe as a follow-up, I don't mean to front run the Autonomy Day in December, but what role do you see Rivian playing in the robo-taxi market? There are some of your peers also developing electric vehicles that have teamed up with some of the rideshare companies. Any sort of anything you could share on that front? Thank you.
I mean, a lot of emphasis has gone on the robo-taxi side. I think independent of whether the application is in a personally owned vehicle or in a robo-taxi, I think really important is recognition that the technology is going to become really a key part of our automotive ecosystem. And so in our view, as we look towards the end of this decade, it will start to become really an important driver for consumer purchase decisions around whether or not a vehicle is capable of driving itself with both hands off the wheel and eyes off the road. But importantly, doing that across a very wide spectrum of roads. So essentially, any drivable road should be something that can be driven by a vehicle without a lot of involvement from the driver. And as it stands today, more than 95% of the miles driven in the United States are in personally owned vehicles. The remainder being a mix between taxi, rideshare, and rental. We think that that's likely to stay mostly the same. Maybe rideshare grows by some percent, but we think in terms of large scale adoption of autonomy, it's going to be solving this for personally owned vehicles that's going to drive the biggest step change for us. Now, saying that, the opportunity for us to participate in robotaxis, it's of course there. It's something that if we chose to partner with some of the big rideshare operators, there's lots of market opportunities there. But our focus today is really on the technology. And that's what we'll spend, as you said, George, we'll spend our Autonomy and AI Day really talking about the technology roadmap, how we've developed it. That's both the hardware, the software, our data flywheel. Of course, we'll demonstrate what all those different elements come together to enable in terms of what the vehicle can do. And And I think through that event, you'll see there's lots of different ways this can be applied in terms of go-to-market, whether that's personally owned or whether that's through robotaxi partnerships, as you stated.
I agree with this. I think autonomy is important. I think people who are my age, which is old now, I think, isn't 50 technically a senior citizen? Let me look that up. At what age are you considered a senior citizen? That's my top Google fill in. So I must be a senior citizen. Let's see. Oh, 65. You're considered. Oh, good. Many organizations offer senior discounts starting at 50 or 60. Oh, thank God I'm not a senior citizen. That's amazing. All this time I thought I was a senior citizen, but no, I can just apply for a senior discount as early as 50. This is good news. Anyway, back to RJ and autonomous driving. I think most people in their 30s are okay with owning a car. I think most people in their 20s are okay with owning a car because that's what they're used to. However, and I think most people that are my kids' age at 13, they're going to be like, yeah, we own a car. Maybe they own one car instead of 2 cars or 3 cars, but they're going to own one, at least one. But my grandchildren, they're probably going to be okay with just having autonomous cars, just hailing one when you need it and then not worrying about a car when you don't need it. Now, I don't know if I'll be around to see that because my daughter was at breakfast and she was eating and she was reading a book while she's eating. And she just looked up at me. I'm across the island from her and she goes, you know what? I just realized you might be dead before I have kids. So I don't know if I'm going to be able to see that. I don't know if I'll see my grandchildren. And that's a very real possibility. I might be dead before she has kids. It depends on when she has kids. But anyway, that was a real nice moment between me and my daughter a couple weeks ago. Anyway, somebody let me know. Send me a message. I don't know if I'll be in heaven or the other place or nowhere, but just right on my headstone. I'm not going to have a headstone. I'm going to be cremated. Just right in the sand where they bury me. It's in Hawaii and Kona, not bury, spread my ashes. Hawaii and Kona, just right in the sand. I'll figure it out. All right. Moving on. This is an interesting question. The question is, would you consider an e-rev, a gasoline generator to power the electric battery? And let's listen.
Our next question comes from Joseph Spack with UBS. Joseph, your line is open. Please feel free to unmute and ask your question.
Thanks. Good afternoon. RJ, the CEO of Scout Motors was recently reportedly said that 80% of their pre-orders are for their e-rev variant. And you have BYD has both a BEV portfolio and an e-rev portfolio. And even if you look at China overall, in recent years, e-revs have been growing arguably faster. So there's clearly demand for that type of product. And I think there's probably some benefits to that type of powertrain for the vehicles you want to sell, meaning trucks. So maybe you disagree. I'd be curious to hear that. But I know you talk about, this all electric future you envisioned. But the question is, would you actually consider offering an e-rev for the U.S. market or globally? And if so, how easy is it to adjust the platform?
Thanks, Joe. Yeah, we're not planning to offer an e-rev or effectively a series hybrid, which would involve putting an engine into the vehicle. So that's not in our product roadmap or something that we're at all contemplating. But I do think it's important to note that part of the journey of electrification is providing customers with choice. And so different manufacturers are going to make different decisions on this. Some will decide to take more of a hybrid approach or an e-rev approach. Others are going to take a pure EV approach. And, in the end, asymptotically, this is all going to be driving towards, in our view, as I said in my opening remarks, we believe everything will be electric, everything will be software defined, and everything will have very high levels of autonomous capabilities. And so we're very focused on continuing to lead with electrification. We think particularly for the mid-size segment SUV, which is going to make up the vast majority of our volume with the launch of R2 and then its follow-on product with R3. That segment really works beautifully with an fully electric architecture where we're able to deliver great performance, outstanding range, and at a price point that's very comparable to ICE or hybrid alternatives.
All right. I have no notes for this. I love the answer. I agree with the answer wholeheartedly. Moving on, let's get a little tariff update. There was lots of tariff questions. This is I believe, the only tariff question I left in. There might have been another one somewhere down the line, but I don't think so. I think this is the only tariff question I left in. So let's listen in.
Our next question comes from Dan Levy with Barclays. Dan, your line is open. Please feel free to unmute and ask your question.
Hi, good evening. Thank you for taking the questions. I wanted to ask if you could possibly give us the latest update on tariffs within the results. I know you had stockpiled batteries, so I don't know if there's, any impact there, but we have seen some changes in tariff policy. And then maybe just broadly on tariffs, given IRA is no longer really consideration, how does that change the battery sourcing strategy for R2? Can you rely perhaps on some of the cheaper LFP batteries from overseas?
Thanks for the question, Dan. As you mentioned, the administration announced the lengthening of the 3.75% MSRP offset for Section 232 automotive tariffs to 2030 last week. It also included the ability to designate parts in the 232 automotive classification that expands the pool of eligible parts, which is particularly important for a company like Rivian, which is heavily vertically integrated. So today we source a lot of raw material inputs that we're building subassemblies of internally that weren't previously necessarily designated under a Section 232 classification. And we're really appreciative of the administration for these new changes that were announced most recently. So as you think about the impacts on the quarter itself, based off of the product that we sold, we were just under the couple $1,000s per vehicle of impact in Q3. And on a go-forward basis, we expect the impact to be a few $100s per unit for new builds once these policies are fully in place. We'll see a trend down in terms of the tariff exposure in Q4, since we'll certainly be selling some vehicles that may have higher levels of tariff sitting in inventory, or parts that we're building towards in inventory today. But that's the general glide path and trajectory there. And then maybe I'll pass the second part of your question on the R2 battery cell sourcing back over to RJ.
Yeah, so the R2 program, we've talked about this in the past, is launching with a 4695 cylindrical cell, and that cell starting in the late 2026 timeframe will be produced in the United States and Arizona. And so we of course sourced that quite some time ago and have been developing in close partnership with the supplier of that cell, which is LG, for some time. As you point out, there are opportunities to look at other sources of battery cells, both in terms of chemistry, but also in terms of supplier. But as it relates to the production that's coming out of our normal facility, that's planned to be the LG cell produced in Arizona.
So it sounds like Rivian is setting itself up for success, no matter what happens with the tariffs. As much success as they could possibly have. And I've thought since Rivian was announced, I've thought that RJ was a really smart person. He's really thoughtful, looked at Tesla and was like, okay, here are some things that we can do and partnerships that we can make to avoid some of this pain. Now, does that mean that he's better than Tesla because he looked at some of this stuff and that Tesla was going through with the Model 3 and made changes? No, because he had a whole host of his own problems when getting the R1 out and then the R1S and the R1T out. The S, was pretty troublesome for them. The T was as well, but the S for sure. But just because you run up against some problems and it takes a little bit to solve them. That doesn't make you a bad CEO or a bad company. That's just the way things are. Next up, we're going to hear a little bit about production cadence. How many R2s can we expect in 2026 versus 2027, that kind of thing. So let's go ahead and dig into that.
My second question is on the R2 launch for next year. Was wondering if you can comment maybe on the production cadence as you see, order flow coming through. Like, how should we anticipate that to sort of look like, first half versus second half, et cetera, for next year? Thank you.
Sure. For R2, as we mentioned, we plan to start saleable builds and deliveries in the first half of 26. But we would steer folks to there being limited volumes in the first half of the year. And then the second half of the year, we'll build up our ramp and see increasing production volumes throughout the second half of the year. And then into 2027, where we'll first be in a position to have, fully optimized the 215,000 sort of run rate units of capacity that we have established within the normal facility.
I don't know that there was anything new in this answer, but I left it in because I think it's important as we roll into 2026 to kind of have a fresh idea of what Rivian is thinking production is going to look like in the first half of the year versus the second half versus, 2027. And it sounds like 2027, some point in time, I would guess it was probably going to be at the end of 2027, they're going to start rocking and rolling with a 215,000 run rate at normal. That might be at the beginning of 2028 as well. Like I said, in my previous, before we played this clip, they're going to run into production problems, and they're going to run into unforeseen production problems, whether that's with a supplier or, with a machine that's not quite working right or whatever it is. They're going to have to solve some issues going into production. That's just the way that it is. Next up, we're going to hear a little bit about capacity, like what vehicles are going to be produced in which factories. We'll learn a little bit about the Georgia factory. It looks like we're going to get R3 sometime in 2028 because R3 is only going to be produced at the Georgia factory. They're not going to produce that in Normal, Illinois. So let's go ahead and listen to that.
Our next question comes from Federico Merendi from Bank of America. Federico, your line is open. Please feel free to unmute and ask your question.
Hi, good evening, everybody. I wanted to touch upon the capacity that you're building up. In the normal facility, you're going to have 215,000 units of production available, and in Georgia, from what I understand, 400,000 additional. But given what Emmanuel said about the the underlying demand and that you're not going to integrate your production with hybrid vehicles or range extended vehicles, how should we think about the saturation of those two plants that you are building up?
The normal facility, as you said, will have 215,000 units of capacity, and that'll be split between R1, our commercial van, and R2. And R2 of that will have 155,000 units of capacity. The Georgia facility, built across two phases, will ultimately have 400,000 units of capacity, and that'll support R2, R3, and variants of each of those products. And I said this before, but I think it's a very important point to make, that the understanding the demand profile from customers for electric vehicles, it requires us to look deeper than just EV sales in aggregate, but rather to look at the strength of a vehicle offering relative to what else is on offer. And ultimately, the way customers are going to be making decisions is, the price of the vehicle, the value it provides, which is performance, capability, features. And so we're very, very bullish on what we're building with R2. The way we think about it as a team is we're building the best car you can buy in this category and in this price point. And we want that to be like abundantly clear and something that is so self-evident when you use the vehicle. We were just talking about how exciting it'll be for people to compare the vehicle to other things in this price category. And so we're very bullish on R2. We've also seen that the rate of adoption of EVs really does tie heavily to the number of highly compelling offerings. And to date, at this mass market price point, so call it in the $45,000 to $50,000 range, there's really been a single dominant brand with really two products. It's, of course, Tesla with the Model 3 and the Model Y. And, with them, taking up roughly half the market, 50% market share, it's not a reflection of a healthy market. It's a reflection of a very underserved market in terms of choice and options. And so what we're building with R2 is very different than a Model Y. It's similar size, similar price, but very, very different in terms of the way it's executed. And so it's going to attract, we think, a very wide range of customers that's including people that may be considering EV, but also importantly, folks that are not necessarily considering EV, but just looking for a great vehicle for, $45,000, $50,000. And so with all that said, what we've shown to date in terms of product sets, our product portfolio is the R2, the R3, and the R3X. Importantly, there's other variants, which of course we haven't shown yet, but that will be built off the R2 and R3 platforms that will support the overall volume in Georgia as well.
I really liked what RJ had to say about, the Model 3 and the Model Y not necessarily being dominant, but it's more that it's an underserved market. Now, I do think Model 3 and Model Y will still be in the top, right? They're still going to be in the top 5, even as Lucid, and they might even be in the top 2, but as Lucid and Rivian start releasing their more affordable vehicles, and then we start seeing other vehicles in this segment, coming out from Ford and GM, whatever they've got planned. Tesla's still going to be up there, but I do agree there needs to be more vehicles in this segment to give more choice.
Hey, Ryan Reynolds here, wishing you a very happy half-off holiday, because right now Mint Mobile is offering you the gift of 50% off unlimited. To be clear, that's half price, not half the service. Mint is still premium unlimited wireless for a great price. So that means a half day, yeah?
Give it a try at mintmobile.com/switch.
Upfront payment of $45 for 3-month plan, equivalent to $15 per month required. New customer offer for first 3 months only. Speed slow after 35 gigabytes if network's busy. Taxes and fees extra. See mintmobile.com.
This episode is brought to you by Capital One. Capital One's tech team isn't just talking about multi-agentic AI. They already deployed one. It's called Chat Concierge, and it's simplifying car shopping. Using self-reflection and layered reasoning with live API checks, it doesn't just help buyers find a car they love. It helps schedule a test drive, get pre-approved for financing, and estimate trade-in value. Advanced, intuitive, and deployed. That's how they stack. That's technology at Capital One.
In our next question, we're going to find out how Rivian is looking towards other markets outside of the U.S. and North America.
Thank you. And I would assume that to basically ramp all that volume, you will export vehicles to other regions or countries. When should we assume that you will enter into other markets?
Yeah, the R2 and R3 vehicles are absolutely architected from the very beginning and designed from the very beginning, contemplating Europe and planning for Europe. And we think they both fit the European market extremely well. We haven't announced European timing yet, but it is really a core part of the program, and it was also a key element of the decision that we made to set up the plant in Georgia, given its ease of export for vehicles going to Europe.
Yeah. If anybody didn't know, there is a seaport in Georgia, in Savannah, Georgia, and they can easily put the vehicles on a truck, take it to the port, and the port can take it to Europe, and the boat can take it to Europe, I guess. The port is going to stay in Georgia. But this makes sense. Rivian said really early on, if not the first day they announced the R2, that it was built for the European market. It might be, I've only been to Europe a couple of times, but it might be a little big for the European market. But in general, I do think it would probably sell well there. All right, our final question, we're going to hear about pricing. And this is a little bit longer of a question, and I kind of I thought about maybe cutting it down a little bit, but ultimately I left it in because it's not all that long, and it's good to hear where Rivian's head is at in terms of pricing on the R2.
Thank you. Our next question comes from Ben Pello with Baird. Ben, your line is open. Please feel free to unmute and ask your question.
Hey, good evening. Thanks for taking my question. So maybe two parts with the R2 coming. I know, RJ, you've talked about $45,000. Could you just talk about, philosophy around pricing? Model Y and other Tesla models, they would release the highest trim, if we want to call it that, first, and then kind of scale down from there as the market expands. But can you talk to us about pricing? And how you set that versus cutting it in the future, considering that for now, at least at normal, it seems like supply could be limited, and then how that ties into the Georgia plant and R2, because it seems like you have a lot going on and pricing, kind of differentiating the two in a short amount of time. So thank you.
Yeah, in the early part of next year, we're going to have an R2 event where we'll go through the full portfolio of R2 products, which would include the different pricing levels across trim and powertrain configuration. And so, of course, as you called out, when we're starting a production line of a new vehicle, we're going to limit the number of variants that we're building. And so we have a launch edition for the R2. And this is a classic challenge because there's, of the thousands and thousands of people that are excited for R2, some will want the most base version, the lowest price version. Others are going to want the highest end version. Some will want something in the middle. And so we spent a lot of time really thinking around what's the right version to launch with. And so I'm not going to provide the pricing of what that is here. I'll say that it's a dual motor variant and that's well appointed, but it's not intended to be our most expensive version, but it is intended to be a very nicely set up vehicle, which we think will make the most people the most happy, which is really the goal we had in selecting our launch configuration. But as implied, following the initial ramp up with that launch configuration, we'll then add in the other trims and other configurations, which at that event I referenced earlier, we'll go through that in the early part of 2026 and talk about when those different trims are going to be available.
Okay. I'm okay waiting for the different trims. What I love is that we're going to get a mid-tier dual motor for the launch vehicle, and it sounds like they're not going to sell the most expensive version first, which is what a lot of companies do. Is they will say we're coming out with a $30,000 vehicle, and then they just start selling the $48,000 vehicle and never get around to selling the $30,000 vehicle. So I like that they're starting in the mid trim where it's a well-appointed vehicle. You get a lot for your money. I mean, we'll see ultimately what they choose to, but if we're taking them out at their word, you're going to get, a lot for your money, a good value. Would probably be a better way to say that. And it'll be the car that most people want to own. I think that's a good approach from a customer friendly standpoint. I think that's a good way to go. All right, everybody, that was our final question. So it's time to end the show. I want to thank Mark for passing along that article that we read at the start. And I want to thank Joseph for his AC HVAC help and advice. It was very helpful. And our next episode is going to be the Kilowatt. It's going to be the Kilowatt 19th annual Thanksgiving extravaganza. The numbers aren't real, just so you know. I haven't been doing this for 19 years. It was a lot of fun. I had a lot of fun with Allison and Steve. In the past, I've done like a little intro and outro to kind of explain what the Thanksgiving extravaganza is, but we've done it enough years at this point where I feel like everybody's going to cotton on to what we're doing. I will say I'm going to put the video on YouTube, and it will probably be more entertaining to watch on YouTube. So I do this for a couple of different reasons. One, it's fun for me to get together and hang out with people and play a game. That I love doing that. But I do it because I've spent a fair amount of holidays on my own, away from my family, especially in my 20s, and it's lonely and it sucks. So I don't know if there's anybody out there in our community that is spending holidays alone. This is the same reason why I don't take breaks over Christmas break, because I've heard from people in the past, hey, I spent this time by myself. It was really nice to hear you come out with new stuff to keep things interesting, because so many people do go on break. And I'm not bragging on people for going on break. It's as simple as it sounds to put together a 1-hour show. It's exhausting. Or even a 20-minute show. It's exhausting. Anyway, you can tell I'm tired, because the more tired I get, the more I ramble, and I am definitely rambling. The whole reason I do this is for people who don't have anybody to spend the holiday with. That's really what I want to get across. And it's really important to me, because I have heard from folks in the community that are appreciative of that, and that goes a long way for me. All right, everybody, that is it. If you want to email me, it's Bodie, BODIE, at 918digital.com. You can find me on X at 918digital. You can find me on LinkedIn. Just search for Bodie Grimm. A number of folks have found me on LinkedIn. Some of them, I'm assuming, came from, Veronica Wright or Efrat Avnet Steinberg of Inner. But, I do recognize some folks from the community. So if you decide to follow me on LinkedIn and you're from the Kilowatt community or EV community in general, just let me know so I know who's who. All right, everybody. Thanks so much for listening, and I will talk to you on Thursday.
Thanks, everyone, for joining today's call. Hopefully you can hear in our voices just the level of excitement that we have for R2. And importantly, the technology platforms that we're building, certainly our autonomy platform being chief among them. We've got a lot of work to do in front of us as we get ready for the launch of R2. But as I said, I've been spending a lot of time in our vehicles, and they are just absolutely incredible, both the vehicle, the technology, the autonomous capabilities of the vehicles. And so we're incredibly excited to spend more time in December 11th talking around our autonomy technology and overall AI within the business and within the vehicles. And then certainly in the early part of next year, starting to get folks in our R2 products. And that is what we're heads down on focus. We spent a lot of time talking about the vehicle itself, but the rest of the business is also being prepared. That's all of our go-to-market functions, our service functions. Of course, as you heard from Javier, getting our plant and our operations teams ready. And so we are focused on that and feeling very, very excited for the launch of the vehicle and for the launch of all this technology that we've talked about today. Thank you, everybody, for joining today's call.
This concludes today's call. Thank you for joining us. You may now disconnect.
This episode is brought to you by Capital One. Capital One's tech team isn't just talking about multi-agentic AI. They already deployed one. It's called Chat Concierge, and it's simplifying car shopping. Using self-reflection and layered reasoning with live API checks, it doesn't just help buyers find a car they love. It helps schedule a test drive, get pre-approved for financing, and estimate trade-in value. Advanced, intuitive, and deployed. That's how they stack. That's technology at Capital One.
Why choose a Sleep Number smart bed?
Can I make my site softer? Can I make my site firmer?
Can we sleep cooler? Sleep Number does that. Cools up to 8 times faster and lets you choose your ideal comfort on either side. Your Sleep Number setting. Enjoy personalized comfort for better sleep night after night. It's the final days of our Black Friday sale. Recharge this season with a bundle of cozy, soothing comfort. Now only $17.99 for our C2 mattress and base plus free premium delivery. Prices higher in Alaska and Hawaii. Check it out at a Sleep Number store or sleepnumber.com today.
Hi, this is Joe from Vanta. In today's digital world, compliance regulations are changing constantly, and earning customer trust has never mattered more. Vanta helps companies get compliant fast and stay secure with the most advanced AI, automation, and continuous monitoring out there. So whether you're a startup going for your first SOC 2 or ISO 27001, or a growing enterprise managing vendor risk, Vanta makes it quick, easy, and scalable. And I'm not just saying that because I work here. Get started at Vanta.com.